Hi guys, welcome back. In this video, I'm going to explain what is R2R process, basically from the consulting point of view. So if you are responsible for configuring business process record to report, I mean, only for record to report, obviously no one is going to hire you. As a core consultant, as a ERP consultant, you are going to configure every business process. But this video is about R2R. So as a R2R consultant or as a finance consultant from the R2R point of view, what are the areas you need to look into in the project and what should be your approach? What are the things you are going to ask to your client, and what are the areas you are going to configure? What should be your approach? So all these things I have explained in this video. Go through it. I hope you will like it.
Record to report we are going to start, but it will be end with our, once we'll end the program, that time it will be there, because starting from recording of a transactions till your preparation of your FSB and all. So record to report includes obviously the transaction postings, but when you are going to, normally in record to report, you must be thinking that this should be our general ledger accounting. So this will be our GL accounting, where we are going to define our GL related settings. Don't consider chart of account here. Chart of account is part of your global settings. So under this, maybe you will think that we will configure our GL group. We are going to define our return earnings. So we are going to record the different transactions. Record to report also include your GL opcodes. But let's say I need to post a transactions related to some expense. Now two terms very often you are going to hear: business point of view and from your configuration point of view. One is your expense and another one is your cost. For example, let's say we are going to record in the finance system as salary. Now that is your expense. So being finance user, I am going to record salary. Salary expense debit, bank is going to credit, or payable is going to credit. Okay, now when I'm going to record the salary, so that time as it is expense, the cost object has to be there. Means in a finance transaction, cost object has to be there. You need to add your department, because when we are going to calculate our labor cost, or sorry, when we are going to calculate our cost of production calculation, we know that labor cost should be included, which is a major component of your cost. In finance, nothing we are going to enter as labor cost. You're not going to record something as labor cost, labor expense. There is nothing called labor expense in the finance point of view. Labor cost, which we need to find out in controlling, when particularly we are going to calculate our activity related cost. Now labor is involved. For example, somewhere we are doing some assemble work, there labor is involved. Somewhere some welding work is going on, there also labor is involved. Somewhere some testing is working we are doing, that is also labor. Packing we are doing, that is also labor is involved. So that's why activity wise we have to calculate the labor cost. What is the source from where we are going to get this cost? Of course we are going to get this cost in from the finance module. So FI and CO, if you'll see, in FI we are recording the cost or recording the expenditure. So that's why we are saying recording of a transaction. Whereas in controlling, we are going to, controlling is not your any recording of transactions. In CO you are not going to record any transactions. CO is purely related to your analytics. Means there either you are going to calculate the cost. I am calculating cost of production, I am calculating my activity related cost. So there you are going to calculate the cost, or you are going to do the analysis of cost or revenue and cost comparison. So that's why when we are going to perform something in other modules, whether it is FI, whether it is MM, whether it is SD, the cost is going to flow to the controlling module. Similarly, when we are going to post the revenue entries, the revenue is going to transfer to the CO module. So CO is your analytical module, not any transaction related module. So similarly, when I'm going to post a GL transactions, one cost object has to be there. So if I will take the same example, when we are going to pay the salary, you are going to add the department, maybe HR department, maybe admin department. So that means under this record to report, we have to configure cost center accounting. You must be thinking that cost center accounting is related to controlling. Cost center accounting is not related to controlling. It is part of your overhead management. So overhead management includes your cost center accounting. Whatever activities we are doing from the cost center point of view, whether it is defining the cost centers for recording of a transactions, or we are doing month-end allocations, right? So initially you have recorded your salary cost with your HR department, medical expenditure with HR department, or some travel expenditure related to your employees in HR department. So we have accumulated cost for the month of July, let's say. Now this cost we need to transfer to our different activities or different production cost centers, because ultimately HR department is not producing anything. All expenses whatever we have recorded with other departments, that need to be transferred to your operation, that need to be transferred to your production cost center. So that's why we have to do the CO activities, core CO activities, and one of the activities is your cost allocation. Again, cost allocations includes your primary and secondary allocations. So those things are coming under your cost center accounting. It seems like cost center accounting is part of controlling, means management accounting. Maybe it is part of your product costing, but actually it is part of your overhead management. So two things you will find, three things mainly we are going to do in the cost center in controlling. One is your cost calculation, COPC. You must have heard something, COPC. That is nothing but your management accounting, product costing. Again, product costing is going to divide into multiple areas. Once I will go there, that time I will touch those points. Then we are going to do the COPA, means profitability analysis, and another one is your this overhead management. Okay, so this cost center accounting is part of your overhead management. Plus, if you are working on profit center accounting, although it is not mandatory, let's say we are working on that too. So that is also part of this one, because whenever we are going to activate profit center accounting, in every transactions, whether it is expense, revenue, balance sheet, material, whatever, so profit center has to be there if we are working on profit center accounting, because it's not mandatory profit center accounting, but learning point of view, we have to configure that one also. So profit center accounting is not part of FI, it is not part of controlling, it is part of enterprise accounting. But let's say business is saying that we are also going to use COPA plus profitability analysis, COPA and profit center accounting both, right? So in that case, profit center accounting also has to be there under this GL, profit center accounting, because you are going to prepare your balance sheet, P&L balance sheet at very high level, that is, let's say company code level. Plus we want profit center wise also we need to have a profit and loss and balance sheet. So profit center also in between it will come. So all this I'm explaining from the record to report point of view, right? So R2R business process, or we are configuring the business process related to R2R. Then,
Pradeep,
yeah, go ahead.
in the COPA, we are determining this via profit center only, right?
No,
The
profit
report.
center can be one of your characters.
Okay,
If you
can be.
compare COPA and profit center is single dimension analysis. For example, let's say it's a consulting firm. Okay, it's a CA firm, and they are doing two type of business. One is they are generating revenue from audit, and they are also providing the consulting services. So they have taken here two profit centers. One is consulting operation, they have created as profit center, consulting revenue and cost, audit revenue and cost. Very simple business process they are following. But let's say a manufacturing company where they have different products are there, different group of products are there, they have different markets are there, right? They have segregated sales market, sales in South Zone, North Zone, West Zone. In this way they have maintained. So different product groups, different products they are selling, or group of products they are selling. They have different markets, which we are saying, let's say they have different sales office, they have different customer base, they have D2C is there, B2B is there. So in that case, profit center is not helpful, because profit center, let's say I am taking product is my profit center. So our profitability analysis is restricted to that. But when company need a multi-dimensional reports, so in that profit center accounting is not helpful. They need COPA. So profit center may be part of COPA, but profit center is not COPA.
Got it.
Okay.
So basically,
So
based on the characteristic,
one of
we
characteristics
can.
profit center you can take. So that means when we'll go for profitability report, we can take profit center as one of your characteristics.
Oh,
Okay, just as you ask the questions, quickly let me show you something here. Just randomly, I'm going to pick one line. This is a profitability report line item. Let's check this one. So here, if I will check my profitability characteristics, you can see many characteristics are there. Like we have generated the report with many characteristics, and one of characteristics is my profit center accounting. This is one of my characteristics. So when we will prepare the report, we will take, this is one of our component, like we have other components are there. But if we are only going to work on profit center accounting, then in that case you can prepare your report just by selecting the profit center. So it is, you can say it is a subset of our original whatever the master level data we have. So if we need a full-fledged reporting, then go for COPA. If just we need profitability report on the basis of profit center accounting, then go for profit center accounting. So small companies, they prefer profit center because it is easy to adopt. Big companies, they will prefer COPA always. And learning point of view, we will configure both. Okay. Then bank ledger accounting also coming under this one, coming under this record report. Under this bank ledger accounting or bank accounting, you can say, although now it is not part of FI as per the product catalog from SAP, this is not part of FI, it is part of FSCM. But again, practice point, configuration point of view, we have to configure it. Otherwise, we can able to go for the payment and collection. Any activity which is we are doing from the banking point of view, that we are going to, maybe you can consider this one a separate business process, but actually it is record to report team is working. So that's why I'm going to include in this one. So banking setups related to your house bank setups, or let's say, because the process is completely changed now in S4. So house bank configurations, your bank related settings, your collection payment is related to P2P O2C, but bank reconciliation is part of your record to report. Okay, so that time we will see. Then very important, your asset accounting. Asset accounting is also part of record to report. So any business process related to asset, whether it is related to acquisitions, all type of acquisition, internal, external, okay, acquisition, let's say you have included advance, so a down payment and all. So all type of asset acquisitions, it will come here. Then calculation of your depreciation, that is also part of asset accounting. Then coming to your retirement, that is also part of your asset accounting. So in total, you can say record to report, if you'll see, this one is mostly handled by R2R team. That means middle management. For example, let's say you will find in business, your middle management is mostly working on record to report. Entry level staff just feeding the data in the system, posting various type of transactions. But these are the work which are the critical work. For example, asset accounting. In company, a dedicated team should be there for the asset accounting. Reconciliation activities, all type of reconciliation. It may be a customer reconciliations with your reconciliations like your accounts receivable, sub-ledger reconciliation which you are saying, or it may be a bank reconciliations, or it may be completing all the FSB, right? So all the closing activities are part of your record to report. So these are the areas which we are going to work on the record to report. I think I have covered everything. GL, cost center, profit center, and another one will be there, that is internal order. Like we have cost center, similarly internal order, sort living objects. So both are your overhead managements. Okay, and it's again subcomponents or preparing budget and all. So everything will come under these categories. Then profit center, bank ledger, and asset accountings. So that's why I said that record to report we are going to start, and we will end the program with the record to report. So once it is done, record to report we will not 100%, once we'll start we will not able to complete it. So because in different time we are going to work. Another, for example, let's say foreign currency valuation. So that is one activity related to GL. So when we are working on the GL accounting, that time it will be included. Now currency settings, that will part of your global settings. We are defining various type of currencies, various type of reporting currency, because S4 is going to support 10 currencies, but foreign currency valuations, that is part of your general ledger accounting. So that's why when we are going to define a business process, it will come. Now, irrespective of whatever the ERP we are using, whether we are using S4, whether we are using SAP ERP, means ECC, or even we are not using SAP, any other ERP we are using, or if we are not using ERP at all, this business process will be there as it is. But if any company is using any not advanced ERP, or let's say they are not using SAP, or they are just using one accounting software, in that case they are doing a lot of manual things. But here we are going to make the process so automated that users are just going to run a report and automatically you are going to have. For example, let's say one loan is there. The loan was, we have taken the loan on 1st July. Now on 31st July, we need to evaluate that loan. Initially, the transaction, the translation rate something, the buying rate was something. right? So foreign currency, let's say our local currency INR, and we took the loan in USD. Now in month end we have to valuate that loan. So when you are going to valuate that loan, the exchange rate loss need to be transferred to P&L, and exchange rate gain need to be transferred to the P&L. So that foreign currency valuation is part of your GL or recorded report. So this is how it should be there. Any question on this segment?
Pradeep, just one basic question. So if you want to record a transaction in system, so what are the basic things that we'll have to configure? Just the basic things like the company code, the chart of account. So how many configuration will need to do to just to record a transaction? Basic
To
transaction.
record a transaction, you need to have all configurations. Let's say you are going to record a normal expense entry. For that,
Correct.
you need to have, if it is a pure FI settings with one cost object, FI has to be configured, your means company code has to be there, then CO has to be there, means controlling area has to be there, GL configuration, this global setting 100% it will be there. Then you should have a, like you can say, GL settings should be there. Then cost center accounting configuration should be there. Maybe cost allocation at this moment not required, but defining the standard hierarchy cost center, defining the cost centers, right? So that has to be there. Cost element concept is not there in S4, means master data we are not going to configure. So GL master will be enough for that. So GL configuration has to be there with the cost center. Then profit center also you are going to add. So profit center configuration has to be there. Then only we will able to post the transaction. So for user it is very easy just to post the transactions, but as our requirement is, I want to see the GL balance, I want to see the GL line items, I want to see the cost center report, I want to see the profit center report. So those respective area configurations has to be there just to post one transaction. Now suppose another record to, one more transaction I want to post here, that is sales. In that case, again, as it will be sales, so customer entries has to be there. So customer need to be debit. Now again, for that purpose, all the required settings has to be there. We need to configure business partner settings. If it is a directly we are going to post through FB70, then in that case, maybe SD configuration is not required. But in reality, we are not dependent on SD, FB70. We are going to have a complete sales process. So sales order has to be there. Your outbound delivery has to be there, then billing document, then finally FI is going to be updated. So that means the SD settings has to be there, the MM settings has to be there, then supply execution, because when you are going to do the PGI, so that time that part is going to update. So that much configurations will be there. So as per our requirement, accordingly we have to configure. So my requirement is whenever there will be a outbound delivery, I want to take the value both in FI, means COGS is going to update, plus I want to see that cost should be transferred to the profitability report. So both areas need to be configured.
Okay.
Okay, now let me show you a few documents related to asset accounting. Few documents are there related to asset accounting. Now let me take the first document. Now, normally in every document in ECC, you must like you have two views. One is your entry view and another one your GL view. If someone is not getting something, it's absolutely fine. Anyway, once we'll start the topic systematically, we will do it from the beginning. Just overview I'm giving. So we have entry view, what the user entered in the system. Then we have the GL view as per our configurations. Whereas in S4 we have the asset view. So this is automated reconciliation between your subledger, that is your asset, with your GL, because in asset accounting you are going to have two updates or two output you are going to get. One is all informations related to asset, which we are saying subledger. Okay, when you are going to have asset register, as all the details related to asset explorer, that is your subledger data. And another one is, that is your reconciliation account, because let's say we have 1000 machines are there. So in balance sheet, we are not going to show 1000 individual machines. In balance sheet, you are going to show that plant and machineries, all details. So that is your reconciliation data. So that is why here we are going to have the asset views. Now this is one asset acquisition entry, which is directly posted in the finance system. That means here FI user has posted the document in the entry view, and they have posted the document, like we know that Normal entry accounting point of view will say asset is going to debit and vendor is going to credit. So here also similar way the entry was posted, asset was debited and supplier was credited. As right now we are in asset view, you can see this document is posted. So in this document you can see accounts payable, as it is a purchase entry, so accounts payable credit, and this one is something we have technical clearing account. The reason here we are using this one for auto reconciliation. For the time being, you take this one as a supplier entry. Okay, if I will show you the operation document, which is operation document is 19,000 document. Let's open simultaneously that document too. In ECC this concept was not there, so that's why I said that for every business process we have to do a comparison with ECC. This is the entry which being user I entered here, or let's say user entered here. So supplier credited, 31 is posting key for credit entry, and this one is going to be debited. So here some account, GL account is updated, but the core entry was updated with the asset number, and automatically because of our configuration system pick this GL account, and definitely this is a technical clearing account which will be used in our configurations, or which you are going to configure. The purpose is for auto reconciliation. So this is our operation document. Now if assume that this entry will be there, so in that case there will be a reconciliation issue will be there, and earlier we used to do, and anyone is right now working on the asset in ECC, I'm sure you must have idea about the ABST2, that is your subledger reconciliation with your GL. That part is simplified now. The moment user is going to post one acquisition entry, automatically you will find two output here. Two document you can see here. One document is related to our purchase or asset. Another document is related to our GL. So now let me show you here for this particular transaction. If we will go to our asset explorer, just very high level get the idea here. So this is one transaction. This is the asset number 1000. Right now I'm in asset explorer, and the original transaction, it's 15,000, right? It's yes, 15,000. So that means this transaction was posted. This transaction was posted on this date. So when this transaction was posted by user, it is updated in my asset explorer, plus it is also going to update in my GL. Now user is not going to do anything here. User is just going to post a normal entry. So this is a F-90 entry. From the F-90, user selected that which asset we are going to purchase, so that is will be debit, and from which vendor we are going to purchase, that is going to credit. Because of that entry, and on the basis of that entry, because of our all the configurations, we are going to get here two output. One is, you can see, operation document. So KR, we know that vendor invoice, if it is directly posted in the FI system, and this one is our reconciliation entries. So here is asset is updated. Now if I will check this GL account 3000, which is my GL report. Now asset team, anyway asset and record to report both are same team only. Now let's say we have two teams. Now asset team is looking the information. For them this will be the output. Now they are going to prepare their report, or they are looking the informations from the asset point of view. So this one is in domain, we are saying fixed asset register, or technically you are saying asset explorer, whatever. Here it is going to provide you all the asset related informations. But simultaneously in the left side also you can see other informations are available. In here we can see that asset was purchased from vendor, and it is also linked with one reconciliation account which is 3000, and same reconciliation account is also available here in my document. Now I am responsible for my GL output. So for me this information is not important, because this is a subledger data. For me the important information is that is asset report, that GL report. So now if I need to prepare my P&L and balance sheet, or I need to analyze my P&L balance sheet, so in that case we are looking here the GL report, and the GL account is 3000. Now assume that in your ERP this subledger and ledger reconciliation facility is not there. Then in that case, on the basis of those input data, we need to prepare our reconciliation balance, because in balance sheet we are not going to show by asset. In balance sheet I am going to show the consolidated balance of a particular category. So plant and machinery, how much total it is showing, same should be available in my system as well, in my GL as well. Okay, so right now this plant and machine, this particular APC machine is showing 17,100, and same should be available in my asset register, 17,100. If I have only one asset is there. If more assets, then consolidated of all assets is going to show here. Okay. This is how it is designed, it should be designed, and this is how we are going to present the informations to the business, and this is how business is going to do. Just with one data entry, that is purchase entry, we are going to see various outputs. So here you can see cost center is also linked with this asset. The reason is whenever the depreciation will be calculated, its corresponding cost need to be transferred to the cost center, because when we are going to calculate your activity related cost, for example, we are saying that we have setup cost. Now that setup cost includes various type of cost. In setup, we are also going to use machineries. So if machineries are used, then depreciation should be transferred. So when the user is going to run the depreciation, so automatically those cost is going to, means expense is going to update it in the finance. Now I'm going to run. So you got this point, right? So you got this point. This is a FI entry, FI asset purchase entry. Now related to that depreciation, suppose let's say I want to see for this particular business, what is the depreciation posted for a particular period. So let's check that. Depreciation 2004. Now I am responsible for the GL activities, or I need to prepare my FSB, means P&L balance sheet. Okay, and for that I need the GL account balance. The depreciation has to be there. So I check my record. So it is updated here, and total depreciation is 248.30. Now this depreciation should be transferred to the controlling, because when we are going to calculate the cost of production, depreciation has to be there. Another team is working on the cost of production calculation, and for them depreciation is important, or cost center includes depreciation. Now I'm checking the same asset depreciation, which is showing here some two values. Let's check the cost center included. This is my cost center report right now, and I want to see whether depreciation included here or not. It's August. It was posted in July. So July depreciation is 145.323, which I can see. First we will verify this information in our subledger, means it should be there in the asset. So let's check July report updated with 145.23. Ignore this one, it's a different one. Unplanned depreciation. So your monthly depreciation, planned depreciation is 145.23. It is there in the asset. It is also there in the GL. 145.23. This may be June data, leave it. Yeah, it is June 30th June. So July data includes 145.23, and same is there in the cost center too, and this one will be definitely included in my cost of production calculation. So that is why when we are going to configure any business process, we have to look into all areas. That is, what is my requirement? So we are not just going to calculate the depreciation. We want depreciation should be calculated. It is also going to update in the finance, plus it should be included in my cost of production calculation. For that purpose, we need to include the required cost object too. So that is why multiple informations are connected with one particular business process. Similarly, let me take another document. Let's check this document. Okay, this is again another purchase document, but this time the asset was not purchased from the finance point of view. This asset was purchased from the logistic point of view, means the previous entry was directly where in the finance system we posted through F-90. Whereas in this case, the document is connected with my logistics system, means through the MM team this was purchased. So here also you can see operation document is there, which is nothing but integrated document, and we have our asset document is there, 2100, this particular transaction, 2100. Okay, on 7th June, this asset was purchased. That's why there is a purchase order connection is there. Now, if I need to check all the purchase related activities, then I need to go to the purchase order. So here purchase order was there, purchase order converted into your vendor invoice. Vendor invoice, now it is, or that value is showing in the asset. So it is there in my asset, that is there in my GL. So this is how the business process need to be configured. So any topic when I am going to demonstrate, or when you are also going to practice, first identify what is my business need, make a complete flow chart accordingly. After that, you need to configure. And this is what actually we are doing or we are presenting in the business as a consultant, right? So for example, if I'm going to present a business process, so here, let's say, yeah, suppose let's say this is a business process. So you are going to post a accounting document. When you are going to present this one to your business, so that time if you start talking about all the technical things, business, they will not get anything because they are not the SP person. So that's why in business language we have to explain, and accordingly we are going to do the system configuration. So when you will practice also, you do the same things. So what is my need, what purpose I need to do this configuration? So once that will be clear, then you configure in this. So what are the accounting is involved here, right? Which account is going to debit, credit, what are the integrations are involved here? Now in this case, we are not directly posting a asset entry, accounting entry in the system. This entry is posted through the logistic. If I will check the documents, you will find, so here multiple things are there. So here my information is there, purchase order is there, and of course for that FIMM integration is required. So here asset related transactions are there because we are going to have asset document plus we are going to have FI document. So that's why asset transaction is available. Then we have the accounting informations are there. So what is my source? Source is my logistic. So that means here there is a requirement of integration between your FI and and particularly related to asset accounting. Then finally, once it will be there, then we are going to have the vendor invoice. Now this vendor invoice is not directly posted in the finance system. It is my logistic vendor invoice or invoice. Okay, so this is my, in this document I can see tax component is also there because when you are going to purchase the something, the tax will be there. So because I have included here some tax related information. So that means in my accounting document, tax related information has to be there. So if you check this operation document, you can see tax component, VAT paid, sales paid, all this, it is there. So first you have to identify the need. Then after that, we are doing the system configuration. Without understanding business process configurations, if you start doing system configuration, you will not get the clarity. It will be like some instruction you are just following and you are doing this, and that is not the right way of doing any system configuration, and that is not the right way of consulting. Okay, so once we will configure, then in detail we are going to touch each point. Right now I'm just giving an overview what are the areas we are going to configure. So mainly under this GL, record to report point of view, you'll see important area. Anyway, everything is important. So mostly we are going to spend more time on asset accounting because asset accounting certification point of view, we'll see first. More than 12% questions you are going to get from the asset accounting. Anything you are going to touch in asset accounting, that is important, right? So whether it includes AUC or it is related to your revaluation of asset, impairment, or like your retirements or different depreciation calculations. So everything is important here. Bank ledger point of view, bank reconciliations and all. I will not consider this is, difficult. I would say that it is a lengthy one. For example, we are doing the bank reconciliation, EBS, right? So EBS is it's a lengthy one because right now, practice point of view, we have to do all the configurations. Not only that, we have to prepare the bank statement and that we are going to upload in the system. So that's why it is going to take time, right? We can say not difficult, but interview point of view questions will be there in the bank reconciliation point of view, and when you are going to interact with your business, they have a lot of confusions on all these areas because here each and everything accounting we are going to convert into business process. So that's why these areas you are going to face some problems with your discussion with the business, and interview point of view you will expect some questions particularly related to that EBS. And asset accounting in all areas is important. Business will have a much more interest on this area. Interview point of view will expect good questions, and certification point of view, as I said, you will get good questions. GL point of view, particularly parallel accounting, that is one important area. Parallel accounting means if in this you can see here multiple ledgers we have configured with different accounting principles. So that is your parallel accounting. Parallel accounting, parallel valuations. Parallel valuation means, for example, let's say we have one asset here. And this asset, now you can see I have two depreciation areas. Both the depreciation areas are linked with two accounting principles. Now if I will select here depreciation area 01, I can see my asset values after revaluation. There is a revaluation is there. So 25,500 it's showing. But if I will go to this depreciation area, You can see here it is not reevaluated, and the asset original capitalization value is also different. So here it is initially 17,500. Ignore this item for the time being. So 17,500. Here we have capitalized 17,900. Maybe because of some business requirement, maybe because of some accounting requirements, accounting standards, or as per that accounting principles, two different values we have capitalized here. As for this depreciation area, there is a revaluation is there, so asset value is increased. So here it is not at increase, so it is because of parallel valuations. That means parallelly we are going to maintain. In my example, I have maintained two depreciation areas or two accounting principles. Let's say in reality, let's say 5-6 accounting principles we have maintained. So that is your parallel accounting with parallel valuations. So if this requirement will be there directly in asset accounting, if you want to adapt this business process configurations, it will not work. So in the beginning itself, we have to plan that how many accounting principles we are going to configure and what are the ledgers we are going to apply here. Now, if I'll check this document, right now I'm in document number 10007. It is linked with my ledger 0L, which is my leading ledger, and it is linked with my depreciation area 01. Now, if I'm going to change my accounting principle, now my ledger changed. So this is my non-leading ledger with a different accounting principle. So this is as per the local tax law. So that initial, on the basis of our initial settings or the ledger configurations, so this one is working. So that's why in end, when you will see everything, you will find that every dots are connected with each other, business process point of view. Learning point of view, when you are going to configure, you are going to configure in part, but in end you will find that everything is connected with each other. Okay, so as per me, this one is important, and another one is your document splitting. Document splitting functionality, it was there in ECC. Here we have extended document splitting, and document splitting is going to apply in all type of documents, right? So once we are going to configure document splitting and we are going to activate, in every document it will be there, because business is more interested for all type of reports. That includes maybe profit center report, segment report, or even business area report also. In all cases, you will find that document splitting will be applicable. Okay, if I will check, I will show you some document. Let me take a random document, suppose. In every document, splitting will be applicable. Let's just randomly going to pick one document. Now, right now you can see this is a document. This is a customer invoice posted directly in the FI system. The first line you can see profit center is missing. Second line profit center is missing. Two P&L entries are there, sales and service, where I have profit center 8002 and 8001, and accordingly segment is updated. Now, if you are going to present this one in the report, or if you are going to finalize our books of account, then of course your balance sheet and P&L is not going to match, because in this balance sheet line item, customer line item, profit center is missing. In this, profit center is missing, and here two profit centers I have included here. So 8002, I have credit entry. This is my sales 50. So credit entry is there. Its corresponding debit is missing. 8001 simultaneously corresponding credit is missing, or debit is missing here 50. Now this is the document which is before splitting. If you have configured document splitting, then if I will go to the GL view, you can see in every line item, profit centers are updated. Not only profit centers are updated, the items are also getting splitted here. As for the profit center, the items are split. So profit center 8001 having its corresponding entries, and profit center 8002 having entries. So this is an example of document splitting. I mean, in this document, let me show you another document. It is on customer invoice. Let me show you another document. Just randomly, I'm going to pick one document. Let's say these are FICO reconciliation. Again, this is a new concept. Let me take this document. Oh no, it's only one profit center. I have to take a profits document where multiple profit centers should be there. One profit center. Right, this is one document. Now, in this document, you can see some zero balance entries are there. To make the document balance, system added few line items here. That is again another splitting. So we have active splitting, we have passive splitting, and we have zero balance splitting is there. So all these areas we need to explore. And document splitting, it's not a topic. Document splitting, one tool which will be applicable in every type of document. I have shown you two documents. One is related to customer invoice, another is related to FICO reconciliation. So once you are going to activate document splitting in all areas, it is going to impact. So these are the major areas you will find that we need to work on the R2R business process point of view. Some miscellaneous items will be there, of course. That time we have to discuss. FICO recon. Okay. Sometimes you will find some small projects related to record to report, and business process point of view, separate team is working, or process we have record to report. Business point of view, record to report will be there, and consultant point of view, record to report, business process configuration should be there. Means, let's say assume that one business is only hiring a consultant only for R2R. So that means as a consultant, you need to configure all this business process in the SAP system.